Hello and welcome to another update video about Bitcoin. Bitcoin continues to be caught in this correction, in this ABC correction, which we have been talking since the beginning of last week. And nothing changed in terms of overall expectations. We're still likely in this fourth wave. We haven't got any reliable bottoming structure in place that would tell us with confidence that this wave 4 is already over. So for now, I still see this as a still unfolding fourth wave. And I think it could surprise us in terms of how long it's going to take to complete this wave 4. Because everybody's waiting for it to finish. But I think because it's end of the year, it might not finish until the new year, but we'll see, Cryptos can always surprise, but just thinking from what I've seen before, in previous years, a fourth wave, when Bitcoin is caught in a fourth wave, especially before the end of the year, it can take 4 to 5 weeks. It will depend on the wave degree and everything, but well, we'll see. Key is we are looking at prices, not timing, and we still have this corrective structure probably ongoing. I haven't got any reliable bottoming structure in place. Again, that would, tell us with confidence the correction is over. This structure can, because it's a wave 4, in reality take a lot of different shapes. Naturally, from what we know, fourth waves are very frustrating. They can take oftentimes sideways corrections. In the modern markets, you often see overshooting B waves, basically fake outs for breakout traders, which makes it extremely difficult to trade breakouts these days. Therefore, I like to trade pullbacks, but you often see these high B waves. So with yesterday's price action, Bitcoin is telling us that it wants to put in an extended B wave. That's at least what I see as the most likely pathway. Again, quick reminder and disclaimer, I don't promote to trade within a B wave. I don't promote to trade within a correction at all. Best approach, and that's what I posted early yesterday as well, or already a few days ago on Discord and Telegram. In my opinion, best approach is to use this to dollar cost average into the support zone. That would be best for most people. And then to take profits as the market makes profits available. Basically, that means within the correction, you could be gridding a bit, or you're just holding for the fifth wave. Just, I'm not telling you to do that. I think it's the best method, though, for most people, very generally speaking. So, because I know that people always try to trade every single wave, and you can do that, but it just get wrecked in a correction. It's just what it is. Again, because we get so many new viewers, you're typically not trading. I mean, this is where analysis differs from trading. You're not trading the different waves in a correction. We use the waves for placeholders. We use the waves for a roadmap, but we mainly use the waves to calculate resistance and support levels, and you use these levels to trade. Okay, so for example, if we have, let's say, what's the best example? So let's say when we come deep into this support area, then it might make sense to start to scale in, because we know when this setup is likely going to fail, which is below $34,070. When we are, for example, down here, okay, somewhere in the middle between support and resistance, and there is a structure pointing to the downside, it would not be the best idea to go short, because where would you stop out? I mean, as long as your reward to risk ratio is manageable, okay. But bear in mind that in a correction you get these whipsaw you get this whipsaw movement, because you're not trading an impulse, you're not trading with the trend. That's always the problem. And the reward to risk, I mean, normally, it's unclear where do you set the stop. That would be a problem. There is no clear, if you go short here, there is no clear stop unless you do it above the last high, which is okay, but then it's not high probability, because we know that a high B wave is possible. So a high B wave can overshoot. It doesn't really have a target even, So that's the problem with these high B waves. That knowledge literally saves you money in corrections. As I say, for most people in corrections, it's all about capital preservation. Save your money for the next big move. Maybe scale in, If you've been gridding this, you'll be good, because you would have started to scale in on the way down, because the overall trend is up, and you could realize some profits as the price climbs higher. It's all a matter of strategy, right? That's just important to understand. the difference between trading and analysis. In analysis, we just look at structure. When you're trading, you need to think about reward and risk. Okay, not blindly follow the waves. Not in the correction, especially, right? It's all about support and resistance. So it's quite simple. Keep it simple. You know, trading is hard enough. Don't make it more difficult than it already is. If we then look at the overall structure here in this, that's the dog. If we then look at the overall structure in this B wave, we're dealing here with an A, B, C structure most likely. And let's see if this structure is giving us clues if it's already finished or nearly finished. First of all, I mentioned to you yesterday that the target for the C wave higher is likely around 43,700, 43,800. That's basically based on the 100% extension level of the A wave. Okay, for this move to the upside in December, early December, middle of December. So basically this move, no, earlier last week, middle of last week. Okay, you know what I mean. So the 100% extension C wave, yeah, oftentimes reaches, so the C wave oftentimes reaches that level. Then we've got here previous area of trade, high volume, and it's the 78.6 retrace. So I think that's a reasonable level to look at. Could possibly stretch a bit higher. I mean, these are the relevant Fib levels for a high B wave. Goes all the way up to 46,520. If we climb higher, unless we see a change in structure, it still would suggest a high B wave because we haven't got a reliable bottoming structure. But of course could go higher, you know. And if you look at higher, the 42,148 level is micro support. And the price structure suggests that as long as we're holding that level now, we should get one more high at least. So I'm looking at one more high here because in a C wave, we're looking for 5 waves. This looks a little bit like a pennant or something. I don't know, it's too early. But it only shows me 3 waves at the moment. So one more high seems not to be needed, but it would look better with one more high. But that 4th wave, small 4th wave in wave C could come down a little more in an ABC structure potentially, but should avoid a sustained break below $42,150, you know, at least to keep an impulse running in wave C. Could always turn into a diagonal, you know, that's a different question. That's possible. Could be a diagonal, then it can come down a little lower, but therefore I only say, you know, this is the first indication that the top has formed already. For now, I would probably still short term look for maybe one more high here to form this B wave, and then yeah, it might be coming down towards the second half of the week. We'll see. Overall, this is still all corrective price action, a lot of overlapping price action. This was a corrective rally, corrective move down, now an impulse up, but that looks like, yeah, this typical ABC structure, like a flat structure. And let's just take a look at the support. Let's just take a look at resistance, observe that, but overall no change really in structure. So that means, in simple words, maybe we expect one more high, and then we have to look for potential reactions, potential 5-wave moves to the downside that could indicate that this circle wave C has started. Don't underestimate how complex such a B wave can be. Yeah, there's nothing stopping the market to say, okay, I've got this now. All right, let's make this just a larger A wave of an even larger B wave, okay? If the move down is corrective, this might be a B, and then we get another attempt of a high B wave. ABC in a larger B, and then come down. Don't underestimate how long this can extend. A lot of you who've been with us for a while know that B waves can always extend. That's why I always say, you know, you don't typically trade B waves because they are the most difficult waves to forecast. You don't want to trade within a correction. You want to stay in the time frame beyond the correction. Yeah, it's important. But you know, you can do what you want. You can trade within a correction. Just be aware that you have to expect more frequent headwinds, okay? Because the trend isn't really your friend within the correction. That's my update about Bitcoin. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.